So let's just get the views of the independent economist He. He actually accurately predicted Asia's financial crisis as well as the subprime mortgage collapse. Andy, thanks for joining us. So you heard what Robin was talking about here. How bad are things getting?
Well, I think that it's not. The issue is that it's going to last for a long time. I think the market is like impatient, always looking for signs of bottoming, picking up. I think after a big bubble bursts, and the recovery takes a long time. Well, what's going on in China is a big bubble. First the stock market bubble, then the property market, and there are tons of financial stuff going around. Now that's deflating. So I think it takes 3 years for the process to reach some sort of a conclusion.
Right, you're saying it's quite similar what China's going through to what the Southeast Asian nations had to contend with a few years ago. And tell me what the similarities are here.
Well, the issue is debt, asset inflation, and the business is turning away from real business towards speculation. So during this period of bubble, there are a lot of problems in the economy are actually increasing, but are covered up by the bubble. When the bubble bursts, all these problems come out. So it takes time to heal. So this is the lesson from the bubble bursting in other countries. It takes time, and the economy is not coming back next quarter. It takes 3 years.
Really? So, many people I talk to sitting there say, well, we've probably seen the bottom already and we should see things picking up and get back to, well, more decent levels of growth by the end of the year.
I think you look at China's property under construction is somewhere close to 8 billion square meters with market value close to 100% of GDP. With that kind of inventory, I think it's really naive to say it's all going to be solved in a quarter. It takes years.
But they've got lots of firepower, haven't they? I mean, you've got interest rates can be cut, the triple R can be cut, they've got money in the coffers that they can be spending on stimulus measures.
Well, when you look at the U.S., they cut interest rate down to zero very quickly, but actually the economy still took years to repair. Even today, the U.S. economy is pretty weak. I think that the monetary policy or fiscal policy can only ease the pain. They cannot change the trend, and the trend is determined by this massive bubble bursting.
Okay, well, let me just talk a little bit about how we go from here. 3 years, you're saying, for this.
Yeah, I think that the issue is it really depends on how fast the economy, China undertakes structural reforms. Now, in the past, China could depend on exports to help out on when the domestic side is not doing well. But now this choice is not available this time. So if China wants to have to recover sooner, they need to undertake really painful structural reforms. There needs the government to slim down. The government now it really accounts for half of the economy. That's taking down the efficiency, taking down the efficiency. It's very hard for the economy to move forward. So I think if China is serious about reviving growth, it needs to go through reforms. Stimulus really doesn't work, and they need to cut the government size by half for the economy to come back.
Andy, I want to ask you this. We're talking about slowdowns. How do we know that they're from the data? Because the data is, people question this data all the time, and so do you, I think. Yeah, I think
that what we look at is that we talk to businesses. We look at prices like a steel price or coal price. What do we know is that the steel price is down from like 25%, and the coal price now is down maybe 30% plus. And we know there are a lot of inventories, and so the inventories, including cars and steel, cement, and so forth. And by the way, cement pricing in the West is down by 50% in the last couple of years. So I think that we know the economy is in a lot of difficulties.
Tell me, what is the real rate of growth then, in percentage terms, of the Chinese economy?
We don't know. What we know is that electricity production is growing marginally, and in the last 10 years, electricity was growing by 12%, and steel was growing by more, and rail traffic was growing by 6%. But all these numbers are fairly close to zero now.
Okay, Andy, thank you so much for that for your time. He is an independent economist.